What you should know about the new listing of Porsche, and is there a stock available that protects against volatility in the markets?
Yes, the second question we can answer with yes.
Okay.
But you will explain what it is now.
Correct.
Porsche.
Yes.
We discussed it in the MarketReporters more than a year ago. Martin and myself discussed it in September because that was before the IPO.
Yes.
And there is now something going on you should know, you should be aware of if you are a holder of the share of Volkswagen. That's really important, really important. I will talk about Volkswagen Porsche, and you will tell us the share that you should have in your portfolio against the hedge of volatility. Yes. I split my part up in two things. First thing, what's next? The share Porsche came on the market on the 29th of September.
Yes.
There was a bandwidth for the amount, that was the capital of Porsche, and that was at the maximum side of the bandwidth, 82.5 billion. It came on the market, the price of the share was 82.5, sorry, yeah. That was in the 29th of September. Now Porsche is trading at 105, so that's almost how much more? 25%. So, yeah. The same day, 29th of September, Volkswagen was trading at 128. It's now trading at around 138. So that increased also a little bit, but not as much. The 16th of December, there is an extraordinary annual meeting about the payoff that they want to do to the holders of the share Volkswagen because they received a lot of money because they had to spin off of Porsche because they went to the market. Yeah. 16th of December there's the meeting. The 19th of December there is the ex-dividend date, and the payout date is the 9th of January. It's the birthday of my daughter and father. It's a huge amount, 19 euros. That's what they propose to pay out, 90 euros. Normally, it's the normal dividend is not that high compared to the value of the stock price. No? So this is relatively a lot. So they use part of the sale for investments, they say, in electric car development, and the other one they pay out to the shareholders. So it's 90 euros. But if you receive it, you pay a 15% dividend tax on it. And if you, in some jurisdictions, you have to even pay more, but they withhold 15%. 15% is 2.85 euros per share. So you lose 2.85 per share. What can investors do? And I know a lot of them talk about it. They sell the share before the ex-dividend date and they buy back later. So they sell it for, let's say, the price of for now, 138, and they buy it back for 138 minus the 90 euros. That's 190. So they pay an average price
after the payouts.
Yeah. After, so they pay on average like 120.5 euro. You sell it for 130 and you buy it back for 190. So then if you look at the cost, let's say 0.1% of costs, then it's around per share 0.1285 euros times 2 is 25 cents. Mm-hmm. So if you sell it and you buy it back, then you only have to pay costs around 25 cents per share. But if you pay it out, if you let the amount come, then you pay 15% on the 90 euros to 85. So you can, if it works, you can earn 2.6 euros more per share.
Because the amount is higher than, of course, a normal dividend payment, where it normally would not be profitable. But in this case, it's interesting.
So you sell it at 138, you buy it back at 119.
So with the discount.
Yeah, and normally it doesn't work because the amount of dividend is small.
Exactly.
So that's something really interesting. People can look at it. Of course, the prices will probably go down before, so the timing is also really important. But you can save 2.6 euros. That's like 2%.
Interesting.
Before I will continue with Porsche and Volkswagen, please you go with the amazing stock you found.
Well, it's also because of the last market reporters you did with Martin. You were speaking. I think it's really correct that the market now is interesting.
What we say, what's correct?
Yeah, but I mean, no, the facts are always correct. But I mean, the sentiment, like that the market is not everything green, everything red. It's like more specific companies going well and worse. And you highlighted a few of them. And today we found actually a share. It's related to the interesting stock markets. Actually, it's Euronext. So you know Euronext from Amsterdam, Brussels, Lisbon. It's actually a company you can also buy the share. Mm-hmm. And we said in the introduction that is it a protection against volatility? Well, of course, like these kind of companies, normally with a lot of transactions, they're doing great. No, that is you can also see it in their figures. So it could be something that is like a protection if you think that the markets will become volatile again, like before, example, 2020 with COVID.
Yeah. So then in March 2020, because of COVID, the market went down.
Yeah.
What happened with the stock of Euronext?
Well, the stock went up, and also, of course, the revenues and the net income, because so they really performed well in that moment, and of course, investors were interested to buy them. Also, you saw this year, but it's a little bit difficult, of course, that the whole year is not very good for most companies. But markets, the second part of 2022, they're not doing that well. The share price, for example, it was 50 in 2020, the beginning. Then it
2020.
went up. Yeah, so let's as the scope, and then with the higher volatile times, it went up to 100. Even recently, end of 2021, it was 100 again, but it fell this year until 60, and it's now trading around 70. So it's not really the lowest point if you want to catch a falling knife or buying the dip. I was listening to you last week. So it could be something that you think, okay, the market is down, the company also is down, but there are some possibilities, maybe it can become better. I will get back later to that, because why it would be interesting, it's also because what they are doing. No? So first of all, Euronext, the fundamentals are quite well as well. Since 2018 until now, the net income and the revenues are steady growing. So it's really almost a little bit boring share, but doing well even in this year. Also a dividend, like 3% at the moment. So I mean, all the criteria, to find an investment. And part of their income is also coming from listings. So new listings, we're speaking about Porsche. IPOs. So
spin-offs.
So and they didn't do too much. Now you spoke about it. It's a difficult time maybe for companies to decide to do this. So last year in 2021, they had like 15% of their revenues came from IPOs. But that is something if you expect. Last year. 2021.
And this year?
Well, I don't have the complete figures, of course, of 2022. Less. But I mean, that could be something in the future. I mean, that if you think there will be more IPOs in better market circumstances, they make money out of it. If you think that, but I think the most important thing is if you think like the volatility is coming back and the company has more trades, they do also the clearing, the settlement. It's a very interesting market, of course, because we are speaking about the stock markets. About companies listed on the stock markets, and actually that's what they are doing internationally. Belgium, they are in Milan. I have a list if you want: Brussels, Lisbon, Dublin, Milan, Oslo, Paris, and of course Amsterdam.
Where is it listed?
It's on the Paris in France. Okay. Yeah. So, like I said, the share price 69.
Earnings per share
5. So we calculated like 14 more or less price earnings. Dividend 3%. And well, it's not, of course, a real protection against volatility. You never know, but in general, companies like flow traders, etc. I mean, they are performing well in higher volatile markets.
Yeah, and it's not a stock that a lot of investors have in their portfolio.
I don't think so.
It can be something new to have a look at.
Yeah.
Okay. Thank you. Back to Volkswagen, because a lot of clients now, because this is in the news, the dividends, so they are now re-looking at the share if they should hold it or not. Mm-hmm. So we discussed about the super dividend or extraordinary dividend. So if we leave that out, not completely, if we look back at the share Volkswagen, then we looked at the earnings per share for the coming years. And we also looked at the earnings per share of Porsche, because what we said came on the market for 82.5 euros. For this year, the earnings per share are 5.5 euros. So that's a price earning of 15 times. If you now look at the Volkswagen share at this moment, it is a price earnings of 4.15. And then if you take that 15, yeah, it's quite a that's why I start speaking more slowly. If you calculate that further, and the 19 euros that they're going to pay out, and you divide it by 15, the price earnings, out of the earnings per share for Volkswagen for the next year will be deducted 1.2 euros. 1.2 euros. So if you then look at the earnings per share of Volkswagen next year, the expectations of the market, based on the share how it is now, the company, they expect earnings per share of 31.2 euros. So by taking out that 19 euros, only, assumably, 1.2 euros is taken out of the profit. So if you take that 1.2 euros out of the profit, what will stay over 30 euros per share. If you then take that 30 euros and you go back to the new price, so the 139 without the 90 euros, 190 euros, so then you have a price earning of around 3.8, 3.9. And they expect more profit in 2024, so then the price earning will be 3.7, 3.8. I don't know where you can find that.
No, me neither.
I don't see those companies. And of course, there's a lot of risk in those companies. They lend out a lot of money, production, economic tailwind, wind from this side. Yeah. So of course, everything, but with the knowledge of today, with the figures of today, it's assumably that they will be trading next year for around 3.8 times profit per share. Earnings per share.
Price earnings, yeah.
So again, to finalize, if you have the Volkswagen share, look at the dividend, and you can make the calculation for itself if you want to hold it. So if you want to buy it back or not, probably. And if you want a stock, not a product, but a stock that can hedge you against volatility, Euronext company, maybe it's one of them.
Exactly.
Thank you for watching.
Thank you.
Give us a thumb. Thank you. Bye-bye.